Hey everyone, hope you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go through it together, generally related to three different topics: wealth building, commodities, and/or financial topics. So let's dive in. Let's take a look, see what people are sharing. If you want to follow me, it's at @finding_finance. And if you want to join our community, finding-value.com, where I dive deeper into all of these topics, sectors, looking for potential investment opportunities. So we're going to start with Christine here. She says new oil and gas plays discovered since 2000. This is with Wood Mackenzie. Hard not to notice the giant natural gas deposits around Africa and the Middle East. So the dark blue is natural gas. The lighter color blue is oil. Now, I look at this and a lot of people say, oh, okay, this is where it's at. This is where it's at. If you take a close look, look where the majority of it is located. Offshore, 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 all offshore. There's very few onshore Alaska, and this is Black Sea here, which is, I guess, offshore. It's basically all offshore, the discoveries. So what makes, I mean, if you were to think going out 5 to 10 years, if this is where all the big discoveries are at, what do you think is going to happen when when onshore oil starts to roll over? We're going to have to basically replace it with offshore oil. So there's an opportunity in offshore for the next decade plus, where I think we're going to see an offshore boom. And this is the data that would support that thought. Now, it doesn't mean that from where we are at today that it will be a straight line. We've seen a pretty good pullback in offshore recently, and there's a lot of opportunities that I think that will exist quarter 4 24, probably into quarter 1 2025, where we can buy some of these assets at very depressed prices. And I'm going to actively, look at these companies and take positions. Another thing is, how are they going to get all this oil, around the world? Shipping some of this stuff may be a little bit different than before, depending on, some of these routes here. So I also think just the whole supply chain of oil here and energy service looks really, really good. And again, if you want to know those names, if you want to know the setups, you can obviously join the website, and I go over that all the time. Bullish nat gas for a coming decade. Meta's 10 billion AI data center will be in Louisiana. Uh, read 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 the release closely. Doesn't say that the data center will be powered by renewables, and carefully doesn't mention nat gas power. AI data centers need reliable, available 24/7 power. Louisiana is big natural gas producer, including the Haynesville Shale. EIA's electricity profile shows Louisiana's electricity's generation is driven by nat gas and renewable energy is immaterial. Unless Meta can divert existing nuclear from going into the grid, no one may want to say it, but it will be nat gas providing the 24/7 power. We heavily invested in a company that is in Louisiana, that is in the Haynesville with significant holdings, and AI data centers are going right by it. You know what else is right by that? LNG terminals. So this is the LNG play over here too. But right now, in end use consumption by source, this is end use energy consumption. Natural gas is 45%. And we're going to be throwing data centers here, so get ready. It's going to be a good bet, I think. And yeah, we don't need to read through all that. So coming back, big head and shoulders pattern for oil adjusted for the money supply. The last time that happened was before the 2000s bull market. Yeah, so I also think that so what this guy is sharing is exactly what I've been saying the entire time. A bigger super cycle move, a big move in oil, a big move in a bunch of different commodities. But what we're seeing here is we've got a shoulder, a head, and a shoulder. This one's more pronounced because it came off a downtrend. So it's a shoulder, a head, and then we're scribing out the right hand shoulder here. This would be 2025 would be analogous to somewhere in 2001 to era or area. And whenever I do these fractal analysis, I take this fractal here and I compare this right hand of the shoulder head shoulder to the right hand of the shoulder head shoulder. So I've been aligning these things quite well. I think that this 2001 bottom there is the bottom here. That's kind of where I think we're at. And then this move up here is this move here, the two little humps. It's this stuff right there. But again, other people think that this is going to crash lower. It very well could do what I call a slingshot cheetah. A slingshot cheetah is where you dive down and then you get people to go short and then it squeezes everybody and it slingshots the price way on up. So it's possible that we do get a false breakdown lower and then a slingshot higher before making that move. It's going to flush a lot of people out. And again, this is oil in the M2 money supply. That's kind of the setup. And this is a bullish setup to go higher. Silver gold news. Gold and silver preparing for upside blast off. Gold set to skyrocket versus the M2 money supply, and silver will outperform gold. The gold versus the M2, and here we are potentially going to head higher. And this is obviously Grady, and this is Silver Gold News sharing that. Ed Finley says from October 1999. So in 1999, oil bottomed. It bottomed. So VLCC, these are the tanker companies. In the spring, we anticipated further downward pressure on rates. It happened with a vengeance. In March of 1970s, VLCC was briefly earning 30,000 per day. During September, it has slumped to 9,600 per day. We do not think there will be enough demand to soak up this supply. So the outlook for the next 12 months is more of the same, and that was the bottom. And it ripped right after this was released. Be careful what you read in articles, stick to the charts, and you want to be buying when these things start to come out, when people are bearish. It's very tough to do because what humans do is humans find comfort in being in the herd. They find comfort in having an idea or an opinion that people agree with. They do not do well when they have an opinion that goes counter to everyone else. And that is what I'll say is the most dangerous thing, is to not be able to think for yourself. And I'll read a quote coming up here that Ian talks about. So Ian says, every multi-bagger's journey is filled with the corpses of loud, opinionated naysayers. You must do the work so you know when to buy. Do your own work so you know when to sell before others. Do the work so you can hold longer than others. You do your own work so you can stand alone. And that's where it is really hard to do what he says, because you read articles like this one and it influences your opinions and thoughts. So one thing that I have done is I try to block out all of these. So you'll have other people that may even do technical analysis, but there may be things that I know that they don't know. So for instance, some people think that this is a shoulder, a head, and a shoulder. I do not think that is the case. Now, that doesn't mean that we can't get a false breakdown. just because I don't think that's a shoulder head shoulder. What I think this is a lead-in pattern for a bigger move that comes like this. I think we're going to go all the way up to some level, some ridiculous level. But that's my opinion. Now, my opinion doesn't mean that that has to play out that way. So there's other things that I'd like to do, like finding alignment with a cheap ratio. If I have a cheap ratio like gold to oil, which it is, it's incredibly cheap, that strengthens my case that we won't go down and stay down for a long time. No one knows what the future holds. They can't predict. But if you can buy when something's cheap with a good technical setup, that's about all you can do for alignment to optimize or maximize your success. That's all you can do. All right. Coming down, we got gold, silver, a case for $45,000 per ounce gold. As stocks crash and gold rises, the Dow to gold ratio will collapse. How far will it fall this time? If the Dow falls by 50%, then gold price would be at a 2-to-1 ratio, 11,000, 1-to-1, 22,000, and 1-to-2, about 45,000. History doesn't repeat, but it rhymes. And he's calling for a move that goes lower here. To me, that's my viewpoint. If we go lower and you go back and you look, well, that was the 1930s. This here was the 1960s, 70s here. This one where we originally pulled back was from 99. That was when that article was released in Tankers and it was the bottom for Tankers. And then this was 2011 here. So every single time this fell, we got commodity bull markets. If this falls, which I think is a incredibly high probability, I think we're going to get a big bull market in commodities. Now, that doesn't mean it will happen immediately. It can be delayed. It can take some time. This one here was a rollover top that took some time. And the way that this looks very similar to this rollover top. So patience may be required. May be required. The Baltic Dry Index is at a new 8-year low for this time of year. Pretty dramatic drop the last few weeks. And you can obviously tell with the dry bulk shipping companies that we've had a pretty big pullback. I would be bullish on this. Why? I don't chase price. I buy stuff when it's down and it's cheap, when your indexes are down. Right now they're down, so I think they look good. Buffett's cash allocation is at 30% of Berkshire Hathaway's total assets. Such an elevated cash position has never been seen in history here. So, he had an elevated cash position here last bull market in commodities. Looks like he's doing something very similar to that. Most people are too fretful. They worry too much. Success means being very patient, but aggressive when it's time. That's really what it is. Success means being very patient. Patience is the name of the game. EIA, crude oil draw of 5 million barrels, pushing gasoline and distillates up about the same amount. So it's kind of we're just shifting inventory from crude over to gasoline and distillates. So it looks like refiners are just shifting it on over. We're doing some refining. Here's Gary Savage. Let's take a look at what he's saying here. Breaking the cartel's hold on silver isn't going to be easy, but the bulls have taken the first step and pushed price out of the box that the cartel had it trapped in. They will fight like hell to try and prevent silver from recovering the 50-day moving average, but all they will accomplish will be to make the short squeeze all that more violent. A free, unmanipulated market in silver is taking the first baby step today. 2025 will be the year of silver, in his opinion. And a lot of these things, he always says that they're manipulated. I don't know how you can really tell that, but I'm sure they're in there trying to slow the move down. I'm sure they are. Eric Neville, U.S. oil inventories reached their widest deficit to average levels since June 2022, while the U.S. Big Three deficit continued to widen. We are told by some that inventories no longer matter because OPEC Plus has ample spare capacity. We disagree. We believe actual OPEC Plus spare capacity equals about 4 million barrels per day and is largely held by the Saudi Arabia. With meaningful U.S. shale, non-OPEC production growth forecast to be coming to an end in the near future, the market will soon look to 2026 plus balances, which are increasingly bullish. At that point, global oil inventories are at all-time lows combined with demand at record highs. It will become much more relevant. And here we are down there. And these are the deficits that we're running. So deficits ever since 2022, it looks like, big deficits, and we are sucking through our inventory. Jordan says silver and inflation adjusted silver. So we know that gold divided by CPI is an excellent indicator for gold stocks. Silver stock sector is very small, but silver CPI can provide some understanding. In real terms, silver and silver producer margins are below the 2020 level, despite nominal silver having broken above it. So we're still at very low levels for silver divided by the consumer price index. We have a long way to go. Grady, so this is again, I share these charts so you guys keep your eyes on the big picture. Whatever you do, do not miss this life-changing generational opportunity. You'll have one chance at it and one chance only. If you do not believe this chart, you need real guidance or you will miss the rest of this move too. And this is the big breakout of gold. It's the third bull move, which will kill the present global monetary system, in his opinion. It's the largest 3 drives up move I have ever seen, in his opinion. So here we go. The end of trend move, and it's already broken out and in stride. And here's Palladium. The big picture charts I post shows the life-changing opportunity this commodities bull market really is. Below is one of those charts. This one is showing Palladium starting its bull market. How do you think the right Palladium or platinum Palladium companies will react once platinum and Palladium start their bull runs? There are very few of them worth buying though, so need the right ones. Many will now wake up to platinum and Palladium, but yeah, we're all over it. We're on the website. We've got those companies. There's basically 3 really good ones, and the physical metals are good too. So what he thinks is we've got 3 waves: first wave, second wave, and then a big third wave. His opinion is another 2,111% move up, this time starting at 1170, when mean target is roughly $25,000 an ounce. It's a 40-year parabolic base indicating a huge move is coming. So it looks fantastic. Platinum looks fantastic. Silver looks fantastic. Gold looks fantastic. This is all just ridiculous. It's all ridiculous. I love it. And that I'm not going to go through that one. That's a pretty long one there, but that's where we're going to end it, guys. So give me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you want to know those 3 platinum group metal companies. I've got all of them. Got the charting. In fact, I did a midweek update, and one of them is on there as a buy signal, or is a good entry point, is what I'll call it. Well, 2 of them actually. 2 of them. But yeah, this bull market's going to be big, and I just like the big picture view. In the short term, don't get scared out. Lots of volatility up and down in all of these different sectors. You're going to see potentially NASDAQ and maybe even crypto outperform for a little bit. They're going to go through a blow-off top at some point, which they're doing right now. And then they're going to go into, I think they're going to roll over, and we'll see all these things start to really move. But that's my opinion there. And again, if you want to join the website, Black Friday coupon code is still active. But that's all I've got for today. We'll catch you next time. This is Finding Value.